Hey guys, it's Max Convexity. Welcome back to my channel. A little dog's name is Jackson. He's over there. He approves. He's kind of rolling over and looking at me funny. I have a good video planned out for you today. All right, what we're going to do is we're going to take a look at 4 different money management strategies on TSLY stock. We're going to go back over the past year and a half, and we're going to see how we would have done in the different strategies, right? All right. Could you live off of TSLY? The tale of 4 investors with 4 very different money management styles. Okay. 4 investors invest in TSLY with very different results. We have Larry, Max, Gary, and Billy. Liquid Larry never met cash he didn't like. He believes cash is king. Math Nerd Max, he never met a metric he didn't like or a formula. He reinvests 2/3 of his dividend back into TSLY, regardless of what goes on with stock, regardless if Tesla has a good month or a bad month. He just does it because it makes him feel better. All right. Growth stock Gary, he's obsessed with Warren Buffett. So he doesn't use high yield ETFs because they're for suckers. He buys Tesla instead and just sells the shares for monthly income. We all know somebody like that. Nothing wrong with growth investors, right? It takes all different types to make the world go round. And then finally, there's Balanced Billy. Now, Balanced Billy reminds me a little bit of myself. He believes a strong portfolios should be balanced between growth and income. Billy is using his TSLY dividends to buy Tesla stock. So he's trying to achieve his balance that way by recycling TSLY dividends into Tesla's underlying. And in his mind, that might help overcome some of the bad things that these high yield funds do. Okay. Okay, so let's see who does better after a year and a half. So it's going to kind of depend on the market environment. I just want to talk about it really quick, then we'll go to the spreadsheet. But so I believe that option strategies are like dogs. You might have heard, I believe there are no bad dogs. There's no such thing as a bad dog. Every dog's a good dog. Yes, Jax, even you. My bird dog might be just as valuable to me for hunting quail down here in South Texas as your German Shepherd is for you in the city, protecting your family. And no, Jax isn't a bird dog. I just made that up. But you get my point. It's a matter of having the right tool for the job. So these money management strategies or techniques are just tools. They're going to work better or worse depending on the market environment they're made for. So let's go back and look at them. So it's my thesis, none is really going to be better. It's just going to depend on the investing goals and your risk tolerances, and most importantly, what the market does. All right, let's play the year and a half back. So who do you guys think comes out ahead on a total return basis? So let's review again. We have Larry, Max, Gary, and Billy. Larry just takes everything in cash. He takes a dividend and puts it in his bank account, keeps it in his, keeps it in cash. Okay. And that's good though. He's always very liquid. Max, that guy, he saw a study sometime and he thinks 2/3 will save him. He thinks 2/3 is the magic number because he saw some study on YouTube. All right. Gary, on the other hand, Gary's going to do really well in some market environments because, of course, there's nothing wrong with growth stock investing. And actually, growth stock investing is generally better when it comes to total return. So, but then we'll look at Billy. Billy might have a good mix of both of them. Okay, so now let's look at the spreadsheet. All right, got another different computer. I gave my neighbor's computer back, and this is a different backup computer that I'm not happy with. I've got to get my MacBook fixed. Okay, here we go. So in the left-hand column, the only data that I need for this study is the TSLY price. The TSLY inception date was last November, TSLY price, and then the Tesla price, which is the reference asset. And then I need to know the amount of the TSLY dividends. Everything on this sheet is derived from columns A, B, C, and D. And column E would be if Tesla paid a dividend, it would go in column E because some underlines do pay a dividend, but in this case, that they don't. Okay, so the reason I used $100,000, let's talk about that really quick. high yield funds are great and everything, but the rule of thumb is, my rule of thumb is no more than 20% of your total, retirement portfolio. So even if you're a middle class person and you have a $500,000 retirement at 45, you're maybe trying to think about retiring at 55. You're hanging in there about 500,000 at 45. Okay. Well, in theory, you could afford $100,000 of high yield funds. Now, yes, you aren't going to put it all in TSLY. That's not smart. But I'm just going to use the $100,000 as an amount to start with TSLY, and we'll do it with other stocks too. But yes, ideally, you would probably have this allocation in probably maybe 5 or 10 different funds. You wouldn't just have TSLY, you'd have some other ones. But whatever. Let's just say that somebody put it all in TSLY just to compare how it does. And then tomorrow, maybe we'll look at if somebody used a different stock, and we can look at different stocks on different days. Put a request. If you have a request, if you want me to look at Amazon, or, we can do the same strategy for many different stocks. So, but let's look at TSLY today because it's been around the longest. So let's see how we would have done. Okay. So the first thing so we're rolling along. The first guy, he takes his $100,000, which is 20% of his net worth. He buys TSLY shares. He gets 2,495 shares. Okay. We roll along and the first dividend comes. It's $1.99, right? And it really was. And it was actually $1, but they had to make it double because TSLY has done a reverse split. They also doubled the price. TSLY never was at 40. It started at 20. Anyway, this is split adjusted. Okay. Well, that's fine. So we take that $1.99 times his 2,495 shares, his $100,000 worth of shares, that equals a dividend of $4,900 and a little bit more. So he takes that and just puts it in the bank. So now that's the good news. The good news for Larry is he has $5,000. The bad news is the equity portion. He started with $100,000 and a month later, he's at $71,000, even including the $5,000. He was actually at $66,000 before the dividend got paid. So he's at $71,000. So poor guy, he's down 23%, 24% basically. Okay, not a great start. So here is Math Nerd Max. Now he's got it figured out because he saw some study on YouTube that says you reinvest 2/3, right? And it helps prevent the bad stuff that could happen to some of these funds, right? Well, it's not a bad idea in theory, I don't guess. So what happens is he gets the $4,965 and the spreadsheet has to break it up into two parts, 2/3 and 1/3. Okay. So the 2/3, he uses that $3,200 to buy more TSLY shares. So he started out with 2,495 shares, just like Larry. But unlike Larry, he now has 2,618 shares of TSLY, where Larry has the same amount of shares, but he has $5,000 in the bank, or, almost $5,000. So it's a trade-off. Okay, well, Max is down 28%. So whatever, it's early. It's early. Now, Growth Stock Gary, he's got it all figured out. He says, screw this. The high yield, the NAV erosion. The high yield funds are terrible, he says. Let's just get growth stocks and then I'll sell the high yield fund. So just to make a kind of apples to apples comparison, I just had him spending his $100,000 in Tesla, and so he's just foregoing the income and just going to use equity. Now he's still going to get income. He'll just sell some shares. Okay. We've heard that on the internet, in Discord a jillion times, people with this plan, and it's not a bad plan. If the market goes up enough and you have enough shares, you can do this indefinitely. But we're just going to make an apples to apples comparison. We're going to say when the other guys got their $5,000 dividend, he gets the same amount of money, or what he's going to do is he's going to raise the same amount of money. He's going to sell however many TSLY shares he needs to. So he goes from 545 TSLY shares to 534. Okay, well, he's down 40% right now. He's doing the worst, but that's fine. I mean, it's because Tesla's going down. And of course, what do you know about TSLY? It has buffer on the downside. What do we know about these high yield funds? People think they do really bad in bear markets. They don't actually. They do better than the underlying. I mean, they do bad in a bear market, but not compared to the underlying. In this case, you could see the guy trading the underlines down 40%, and the guys trading the covered call funds are, down 30%. It's not great. I'm not, but it makes a difference. It can, that big of a difference could keep you from getting a margin call. So it's not nothing is my only point about that. All right. So I'm just going to measure the amount of cash he's taken out. So he took the 49.65 cash out. It's in his pocket, but the thing is he's sacrificing because he has less shares. So let's just roll this forward a couple of months. Let's go down here. Let's see what the next dividend is. The next dividend is $1.80, so it's a little less. Now, the price of Tesla started off at 183, and now it went down to 100 almost, at 110, and now it's rallied back to $1.60. So Tesla's doing better. The dividend came down a little bit. The dividend's down about 10% over the prior month. Okay, anyway, let's just roll the math for it. So it's Liquid Larry, he got $4,400, basically $4,500. So he just puts it in his bank. So his bank account's kicking ass. He went from having 5,000 to 10,000 basically. So you include his 10,000 with what his portion of Tesla, or I'm sorry, if TSLY is still worth, he has $86,000 of TSLY plus 10,000 in the bank. It's great to be Liquid Larry, right? Okay, so he's only down 4%. He's doing great. So here's old math nerd Max. What's he doing? So he had to buy, this time he had to buy $3,100 worth of shares. Last time he bought $3,200 worth of shares in TSLY. So that took a share count up to 2618. Now he got another dividend. Now his share count's to 2713. Okay, so he's adding shares of TSLY and he's putting some money in the bank. He has 3,000 in the bank, right? Because he's keeping 1/3 for himself. So altogether, his total portfolio is down 8%. So his little math nerd mind is not doing as well as Liquid Larry, who just does nothing but take the dividends and keep them in cash. So anyway, it's interesting to know. Let's keep rolling this forward, and let's look over here at Growth Stock Gary. He had to sell another 19 shares. He's down to 515 shares. But he rallied back. He's only down 22%, or no, he's only down 14% right now. On ex-dividend day, he's down 14%. Then the next day, he's down 8%. Gary's come flying back. All right. Gary's back in the ball game. Okay. But here's Billy. Like I said, Billy kind of reminds me a little bit of myself. He's kind of a common sense guy, not too much, not too, kind of plays it right down the middle. Well, anyway, guess what? He just bought another 18 shares of Tesla. So his Tesla stake went from 13 to 31. So he's taking the dividends, recycling it into Tesla. So he has 2,495 shares of TSLY, like some of the other guys, plus he has 31 shares of Tesla. Well, his account, though, even for all that good stuff, is down 13%. So even though he thinks he's so smart and balanced, fair and balanced or whatever, his performance so far has not been great. And right now, the best performance is Liquid Larry. All right, so I'm going to let Jax out because he needs to go outside. So I'm going to put this video on pause, and I'll be back in just a second. I appreciate you guys' patience. So Liquid Larry, he takes his $4,500, puts in his bank. He has $10,000. He's down 4%. Oh, Max, I mean, there's just no cure for this guy, but he takes $3,100 and reinvest it in TSLY shares. So now he takes a stake of TSLY from 2,618 to 2,713. So, and TSLY, the price has been pulling back, so he's in essence buying the dip. But I mean, is he throwing good money after bad? Probably. The only smart thing he's doing is keeping a little bit for himself. So that's $1,600 he's put in the bank. So he's built his bank balance up to $3,200. So his total account's now worth $91,000, which makes a total return of down 8%. He's still lagging. All right. And then we have old Gary. Now, Gary's about like Max. There's no solution for Gary. His mind's made up. Max's mind's made up that, math is the solution. Gary's mind's made up that growth is the solution. Well, growth works all right as long as the price of TSLY is going up. But unfortunately, it started at 183 when this experiment started. And here we are at the second dividend. And the price is at 160. So that has not been kind to old Gary. All right. So you guys get the idea. So now let's do this. Let's roll it forward. Let's roll it forward to 6 months. If you guys remember 2023, we had a rally in Tesla stock price. So here we are right here. Here was the first month. Here was the second month. Okay. And we're right here right now. Okay. So the third month, it's going to go straight sideways. The fourth month is going to go sideways to down a little bit. But then the fifth and sixth month, they're going to blow up. And then by July, we're going to make a top, a top that's going to hold for a long time. It's still holding. Basically, it's 300. Let's just call it 300. That was a hell of a top. But in any event, remember, this experiment started with the stock price of Tesla around 180. So it should be real interesting to see how the strategies are doing with the price of Tesla at 300. So let's roll this strategy forward to July. Let's just look here. There's March, dividends the same. Then the dividend went down in April. Dividends down to $1.65, but the price is going up, and that's the way it works sometimes, lots of times, on indexes especially. Now the dividend's really low. Oh my God, people are probably pissed. Dividend's only 88 cents. The dividend's being cut in half. Holy cow. Well, but of course, the price isn't even going up. The price is still at 153. The price doesn't really start rallying until June. I didn't know. Okay. So anyway, so yeah, the price is actually going down. So they are pissed. This is the double, the dividend going down and the price of the reference asset going down. Well, and the price of Tesla going down. Remember, if you started this at 40, it's at 26 right now. My gosh. Or you bought it at 20, it's at 13. I wasn't around the community when this was happening, but I could imagine what was going on. That was not a fun month, but it should be interesting to see how the strategies react to it. Okay. But then the next month, the market starts to rally. The dividend goes back to $1.60. People are happy again. And then the market takes off. And then by the next dividend day, it hits 261. And it's like 2 weeks from the top. The top's between the next two dividends. And the dividend was really high. The dividend's a record dividend. The dividend has never been higher. Okay. So this is an example of when single stock volatility goes right. Unlike indexes, single stocks have the potential to both for the price of them to go up at the same time the volatility increases. With indexes, it's the opposite. Volatility increases as the price is going down, almost always. So this is the good thing about single stocks. And this gives you convexity or a tailwind if you invest in high yield single stocks. And this happens. You can't guarantee it's going to happen, but if this happens, you get a tailwind and it gives you a convex profile or return as long as this condition exists. Okay, well, so let's look here. Let's check in with our guys here, with our boys. So here we have old Liquid Larry. Man, he's just killing it. Look at this. He got a $5,300 dividend. Boy, he is having a big time. His running balance is at $125,000. He's got $96,000 worth of TSLY stock, plus he's got $29,000 worth of cash in the bank. He's killing it. He's up 25% and just loving life. All right. Let's check in on Max. Like I say, there's no cure for Max. Max is just I don't know. There's no cure for a guy like Max, but let's see how he's doing. So, he just got a huge dividend. So get this, his dividend is $6,500, where old Liquid Larry's dividend is only $5,300 because Max been buying more shares. And a lot of those shares they've mostly been at a lower price. So Max is averaging down, and Max probably read it in a book somewhere that was a smart thing to do. Max is totally a book learning. All right. Well, you got to love it, though, because the reinvest portion is $4,300 of that huge dividend. So that's going to take Max's share count on TSLY from 3,000 to 3,182. So that's good. And then Max is putting a little bit of cash in the bank. That's good. As Max's bank balance is up to $11,000. Okay, well, Max, thank God, is up 26%. Finally, some of the book learning's paying off. You know, although Liquid Larry, that's not doing anything, up 25%. He's just keeping it in the bank. So it's whatever, to each his own. All right. Now, here's old Growth Stock Gary. Let's check in on him. Now, he's been selling the stock. Now, unfortunately, whenever there's a huge dividend, he has to sell more stock just to make it an apples-to-apples comparison. So remember, Gary doesn't believe in growth stocks. The reason I chose $100,000 is $100,000 on the other guys is a 20% allocation of a $500,000 retirement portfolio for a dude in their mid-40s. Okay, so the numbers work, even though you shouldn't have it all in one stock. Well, Gary doesn't believe in these funds. He thinks they're bullshit, and the NAV erosion's terrible. And I mean, and that's cool. He's right. It is. It can be, and you have to allow for it, for sure. So, but at the same time, you know, the total opposite way to go would just be to buy shares of the underlying, and that's not a bad idea. So Gary's sitting here having to sell shares of the underlying to keep up. So his initial stake of Tesla is down from 545 to 386. But because the price has rallied, he still has a $100,000 stake in Tesla. So he's still doing all right, especially when you consider he's got 24,000 in the, well, I'm sorry. Well, he doesn't have it in the bank, but I guess he could. Yeah, he's cashed out 24,000. So anyway, he's, you know, he's doing fine. He's doing fine, but he's only up 1%. Where, you know, Max and his math is up 26%, and old Larry that does nothing is up 25%. Larry's he's at the freaking pool hall shooting pool. He's never read a book. He just keeps it all in cash. He's doing just as good as Max, just as well as Max. All right, and Gary down here, Gary's actually not doing great right now, but we'll see. Not great by comparison. Okay, so then, but you know what, Billy, like I say, Billy's a good guy. He's just really solid. Billy's just salt of the earth. He's as solid as you get. All right, and look at him. He's taking that old freaking, that big dividend, and he's buying more shares of Tesla. So he added another 17 shares of Tesla with that huge dividend. So he's got his full original stake of TSLY, which is worth $90,000, even after all the NAV erosion, still worth $90,000. But he's, you know, reinvested his dividend money, which is what makes the NAV erode. The dividend is the erosion. So he's taken the dividend and put it into Tesla shares. So he's kind of gaming the system in a kind of a different way than the Max nerd is. And Billy's obviously much smarter than Max. But anyway, Billy has it's taking a holistic view of the portfolio and investing. He's looking at the big picture, and he's not just so focused in on Tesla's freaking dividend. Okay. Now, if you look at the share price, so, you know, Tesla's share price is at a high, and he has 134 shares. So this guy's stake in Tesla's worth $35,000, plus a stake in TSLY's worth $90,000, $125,000. Billy's up 25%. So everyone's basically up 25%. Billy, Max, and Larry that did nothing. And of course, Gary right now is behind. But if the Tesla stock keeps going up and keeps going up, Gary will probably be all right. I guess we'll see. We'll see. Okay, so now let's look at the stock price. Let's roll it forward another 6 months. So we go from this high right here. Let's roll it to the October low. Let's roll it to, because I remember that. Let's roll it to October, November timeframe. So basically in that time frame, the stock dropped from 300 to 200. That's an ass kicking. That's 33% drop. That's bad. So I don't expect great results this time, but let's roll it forward and see what we get. Okay, we'll just kind of look at the dividends though. The dividend, that one dividend in July was a record. So then August is $1.66. Then it's going down $1.17, and the stock's pulling back too. I mean, the price of Tesla's only $256 instead of $300. So it's dropping, dividends dropping some more next month. Same thing, down to $246 Tesla price. Dividend dropped to $1.15. Dividends about half of what it was just 2 or 3 months ago. People are starting to get pissed again. All right. Now the dividend still sucks. So this is the November 8th. So let's look at this. So we get another shitty dividend, $1.16. The price of Tesla's dropped to $219. Even though the price of Tesla was $180 when we started this test. So the price of Tesla's still up, but it's down compared to where it was just a very few months ago. So let's check in on our boys. Okay, so old Liquid Larry, man. Larry's definitely buying the first round at the bar. He's buying every round because he's got the money. He's got the freaking cash. All he's got to do is get out his debit card and, he's got $105,000 he could spend. Now, his TSLY position, his 2,495 shares, is down to $63,000. The NAV depletion is putting a little hurt to him there. But anyway, it is what it is. But good thing his bank balance is saving him. His bank balance, I'm sorry, is 42,000, of course. So that makes his total, his running balance, 105. Okay, my bad. Nice job, though. Nice job. It's nice. It's a good problem to have $42,000 in the bank. It sucks your original TSLY positions down a little bit, but all right. So at this point, old Larry's up 5%. Let's scan over here and see what old Max, like I say, Max, I mean, there's no telling what's going on with this dude. Well, his dividend was $4,000 because he keeps adding to his shares. He's getting a huge dividend. He's going to reinvest $2,600 basically, put $1,300 in the bank. He's got $1,700 or $17,000 in the bank, plus his original position is worth $103,000. Max's reading's kind of paying off. He's up 3.8% right now. That's not bad. All right. So then there's old Gary. Gary had to sell another 22 shares, so he's down to 274 shares, which makes his stake in Tesla only worth $60,000. Now, it is important to remember he's cashed out $36,000, so but his stake's going down. His stake is going down for sure. So he needs the price of Tesla to recover, right? All right, but he's down to 200 and whatever. He's down to about half the shares he started with, right? What did you start with? 545? Oh, not half. He's down to a little bit more than half. Okay. So how do you think old Billy's doing? Well, let's look. Old balanced out Billy. All right, so he's getting a $2,800 dividend. He still has original shares of TSLY, so has $71,000 of TSLY, taking the dividend and buying 24 more shares of Tesla, taking the stake to 203 shares. Tesla share price is trading at 246, so 246 multiplied by 203 equals $50,000. He has a nice portfolio of Tesla shares, 50,000. So the whole thing he's up 21%. See, Billy, I told you guys, this guy's solid, and his portfolio is solid. All right, so let's roll it forward, I guess, to current day. I mean, what do you guys think? Yeah, let's roll it forward to current day. So between those 2 days, the market, Tesla, continued to drop quite a bit, even though it's rallied recently in the last week. The Tesla shed another 20 or 30% over the next time frame. So let's just go through and kind of see how everyone's doing. So first of all, let's look at the dividend. So this is the first okay, that's the November dividend from last year. We were just looking at that. Okay, here's the December dividend. By this time, if you guys remember December, it's when I first started my channel, and everything was ripping. I was covering the indexes. They were ripping. November, December, it was a huge face ripper. Then we had a pretty quick severe pullback in the first week of January. But this was, face ripping time. So sure enough, the volatility is not really there, and the dividend's only paying $1.20. But Tesla's share price is still hanging in there at $238. It hasn't really started dropping yet because it's going up with the rest of the market. It's still solid at this point. Okay, well, Liquid Larry, he takes his $3,000 dividend and puts it in the bank. So he's up to $45,000. His total account's worth $107,000. He's up 7%. Not bad, Larry. Okay, well, old Max, he has a bigger stake in TSLY. He has 3,600 shares now. So his dividend's $4,200. His 1/3 that he's keeping makes his bank balance 18,000, and he's going to reinvest 2,800 this time. So his TSLY position goes up, about however many shares that is, 100, and he buys another 120 shares of TSLY. Old Max is up 5.3%. All right, not bad, not bad. Okay, oh, here's Gary. Now, Gary, what in the hell is going on? I mean, Gary had to sell another 21 shares. So Gary's position's down to 231 shares. He only has about $55,000 worth of TSLY left. He's lost about half a stake. Now, it's important to remember he's supporting himself. He's living in the same style that Larry's living in. Larry's just putting it in the bank. I mean, they're living in the same style. They're cashing out the same amount, but the old Gary's having a problem with his NAV a lot more so than Larry is, just because of the way he's managing it. So, well, let's look at this. Also, to be fair, Gary's putting it in the bank. I mean, so he has 38,000 in the bank plus 60,000 in stock. I mean, he has $98,000 to compare apples to apples, but Liquid Larry has 107. Okay, so Gary's not doing bad. There's nothing wrong with what Gary's doing. Like I say, any of these strategies might fit depending on what your goals are and your risk tolerances. Okay, but I just, I'm thinking that maybe Billy or Max have it figured out more so than Gary or Larry. But I don't know. We'll see. We'll see. Okay, so now let's just roll it forward to current day and see where we're at. $1.11 dividend, 80-cent dividend. Oh my God, that's a terrible dividend. 81 cents, and the price is starting to drop at the same time. This is the perfect storm that sinks single stock volatility. Whenever the reference asset price goes down at the same time volatility goes down, it's not good news. The trade-off is we saw last summer that with TSLY, the volatility was going up at the same time the reference asset was going up. So, it's not like it's all bad news, but it was not good news the first part of this year for TSLY and therefore TSLY. All right. Yeah, the dividend's sucking, and so is the price of TSLY. Let's see how our guys are doing real quick. Let's check out this March right here. So Liquid Larry, he's down 6%. The good news is he's got 52,000 in the bank, but his stake in TSLY's sucking. Max, like I say, Max, you don't know what to do with Max. Max is down 13%. It doesn't matter how many books he reads. He's still down 13%. He'd be better doing nothing. Old Liquid Larry's doing better than Max. Like I say, just no cure for Max. All right. But there's not really much cure for Gary either. Gary's having to dump another 16 shares of TSLY, and he's having to dump it at this low price. So he's having to dump more shares. And anyway, you get the picture. He's cannibalizing his position. This does not, I don't know if he's going to come back unless TSLY face rips from here on out. I don't know. I don't think this guy's ever coming back. All right. And then we have our hero. Oh, Billy. He's so solid. His strategy is just, he's got it covered both ways. Now he's down 7%. Okay. But I mean, look at TSLY. TSLY's getting killed. He's down way less than the other guys. Okay. $7.53. He's actually down the same amount as 7.53 as Liquid Larry. All right. So let's roll it forward to the end. Let's see what happened. We only have a couple of dividends left. That's the April dividend, 68 cents. Man, that one sucked. Then 69 cents. 64 cents. Okay, so that's the most recent dividend. Let me just make sure I have most recent data pulled down on all of these traders. And I do. Okay, so we're going to go to current day. All right. TSLY's stock price, and this isn't current day. This was actually, this was the last ex-dividend day, but on June 6th, Tesla stock price was at 177. They paid a dividend of 64 cents. Share price of Tesla was at $14.84. You guys know all this. We've lived all this. All right. Liquid Larry, what does he got going on here? He's taking the $1,500 dividend, which isn't much because it's only 64 cents in the share, you know. Anyway, but he's taken what little dividend he has, put it in cash. So it's made his cash go up from 55,000 to 57,000. So you got 57,000 in cash, about $37,000 worth of TSLY stock, down about 5 or 6%. Okay. Here's old Max. What's he doing? He's plugging along here. Now he's down 9%. Once again, he's down more than the guy that did nothing, just a little bit. But you know, there's some good news, though. He's got more shares. He's got 4,426 shares of TSLY. So even though the dividend of TSLY is going down, his dividend is staying pretty consistent because he's adding to his shares. Let's look at his dividends and see if they're how consistent they are. The dollar amount: $2,700, $2,800, $2,700, $3,100, $3,000, $4,000, $4,200, $4,000, $3,800, $3,800, $5,200, $6,500, $4,700, $2,500, $4,600. Anyway, you could see the past few months, they were very consistent because we're adding as the price goes down. We're keeping our average price. We're kind of gaming the system to take advantage of the lower price. But to be fair, the strategy is still down 9%. So how big of advantage are we really taking? You know, it's negligible. Larry's down 7%. So we're down 2% more than just doing nothing. Now, the trade-off is, and we're going to look at some charts, as Tesla takes off and has started to turn around and go back up, then Max is going to take off again. Max's strategy will. Like I always say, there's different strategies for different market types. Now, old growth stock Gary, he really needs Tesla to take off. He's only got 145 shares left. He's down to only $25,000 worth of Tesla. But if Tesla doubles in price from here, his $25,000 could be worth $50,000. And he's liquidated about $50,000 worth that he's got in the bank or somewhere. So, you know, it's not the worst situation for him, but he's running out of equity. He's running out of equity to do this with. Now, Billy here, he's actually up 2%. At the same time, these other guys are down. And then as the days roll by, Billy's total keeps going forward. Billy's going forward almost to last Thursday, and Billy's up 12% as of last Thursday. Okay. That's not bad. I mean, that's actually pretty good, especially when you consider compared to the other ones. So I wanted to show you guys this also. Okay, so the blue is Gary. Gary's the growth stock dude. Now, Gary's system takes off for a while. You know, early on, Gary's doing fine. Now, but he doesn't mess with high yield stocks. So he's all in growth stocks, of course. Now, Billy, though, he's just balanced out. He has his high yield stocks because he realizes that selling volatility can be a good play, you know, and it's a nice way to develop an income, to get a little passive income. Same time, he realizes, hey, there's problems with these strategies. One of the main problems is the darn thing, if the market rallies, if the underlying rallies, these things don't catch hardly any of the upside. So Billy started thinking, what could I do about that? So he's thinking, well, you know, old Max, he's just so by the book. He's taking it and buying actually more shares of TSLY. But do you really want more shares of something that's going down all the time? And my God, if Max is in a taxable environment, he's getting killed on taxes. So, but he isn't. Full disclosure, he's in a tax-free environment. Max is. Otherwise, that strategy won't work. Don't do that strategy unless you're in a Roth. So Billy's thinking, well, these things can be good, but too much of a good thing can be bad also. Let's just take it and recycle the dividend into Tesla shares. Not a bad idea, right? And you can see he's done better than the other strategies right now. That doesn't mean he always will. This is only a 1.5-year study. I'll keep these charts updated. Let's look at this chart also. Now let's look at this chart. Okay. Right here is Max and Larry. I misspelled. I put Ari. His name is Ari. I'm just joking. Well, so Max, of course, the book nerd, he reinvests 2/3. He's red. And then, Larry just does nothing. Lazy Larry, right? Liquid Larry, whatever. So Larry's actually a little bit ahead of Max. Now, what I think we're going to see is you notice that whenever the market, Tesla was rallying, Max was ahead of Larry. So Max's strategy buys 2/3 of the dividend on new shares. So those new shares will pay off in theory if the price of the underlying goes up. So you can see it's pretty much when the strategy drops under the break-even line, Larry pulls ahead. And when the strategy goes over the break-even line, Max pulls ahead. That's just kind of the way it works. Max's strategy is more of a bull market strategy. Larry's strategy is more of just a neutral strategy. Just pretty much doesn't take a stand on it. Max is trying to outsmart the NAV decay because the NAV depletion. The NAV depletes by the price of the dividend. So Max just figures, hey, you spend 2/3 of the dividend back into the fund itself, even though it's coming down. Because you do that, you're getting shares at a progressively lower price. So you're improving your overall position is the theory. So we'll see. I'd be interested to know which one you guys think works the best or which one you guys are doing. So just in the time I've been doing these, I've thought of some more scenarios. So in my next video, I'm going to use a different stock and I'm going to use maybe one more different scenario. I don't want to spoil what that is yet, but it's going to be interesting. So we'll have probably 5 investors. Also, we may drop an investor. I may just drop Gary. We may just have to tell Gary that he's not in the high yield club, because Gary's strategy I don't think it's going to work. I just think somebody's going to have to tell Gary it's not working out. I just think that, I think that you could see the value of having a fund that generates an actual income in a different manner than just having to sell the shares. Yes, and the high yield funds aren't perfect. And there's some instances where selling the shares would probably work better. But just for the sake of, I'm trying to get to the best way to manage and hedge these high yield funds. And so the selling shares thing, I think we're just going to retire that strategy. So anyway, if you guys have a suggestion for a strategy that I ought to model on the next one, I'll definitely consider it. Okay, but everything depends on the market environment, of course. So who do you guys think came out ahead on a total return basis? Well, we know now because we saw the study. It was old Billy. Billy's the hero. All right. Usual caveats apply. Back TSLY. So, and also I made this back test after I've lived through all this in real life. So even if I try not to be biased, I remember what happened last fall. So when I'm trying to design strategies, even if I'm trying not to think about it, subconsciously I'm thinking of stuff that would work in last fall's environment. Next fall may not be last fall's environment. That's important to remember. Also, I saw a great video, THB, the financial coach, and I went to, he was on my New York trip. I got a chance to meet him. He's a great guy. I really enjoyed meeting him. He has some good content. Anyway, I was watching his content today, and he mentioned a strategy like this where you could take a high yield fund and you could reinvest the dividends in the actual underlying stock. And he was calling it could be like a dividend wheel strategy. That's a great idea. That wasn't my idea. When I did this, I was just trying to make an apples to apples comparison. But his idea is basically what Billy, the hero of the study, is doing. So I think that strategy does have potential. And I'm going to be watching Coach and seeing. I bet he comes up with some good content on those. But yeah, I bet you could do some really good trades. Just call it a will and do Billy's strategy. I mean, now, so I'm going to go a step further, though. I'm going to say this is opening up possibilities for all kinds of strategies. How about this strategy? How about a single stock target fund? How about turning Tesla, where you own shares of Tesla, and we'll call it target fund 20% because that's what the other ones have been paying. It could pay whatever you wanted in theory within reason, but you could buy Tesla. You could do a pairs trade with Tesla and TSLY in the right proportion, and you could rebalance every ex-dividend day, and you would essentially own Tesla and get a 20% dividend, which would be huge to have a growth stock and get a 20% dividend. Now, yes, you won't fully have access to Tesla. It would water down your stake a little bit. I'm going to do some content on the single stock target funds. So, but be looking for Coach's content on dividend wills. I think that's a great idea, but I'm going to just kind of stick to maybe different things. And I've also would be interested, and I don't know how I'm going to model this. You could also do some really cool stuff with buying yourself black swan insurance, where you own one of these funds, like let's say TSLY maybe. And, their yield is about 60%. Now we know that's not the true yield, and it's not the total return, because a lot of things can happen on the way. But one of the things that can happen that messes up your total return in one of those index funds like TSLY is if the index crashes and goes down 10% real quick or 20%. Well, I'm also going to model strategies where a person could take half of the dividend and use it to put on a put spread ladder and essentially lock out downside, essentially like these structured outcome funds are doing. So essentially try to construct a single stock hedged equity fund where you could invest in Tesla and get Tesla upside or part of Tesla's upside without getting as much downside. Anyway, I'm interested in both those strategies. Be looking for some more content on that. If you have any other ideas, that'd be great. When I talked with Jay, and that's the next video I'm mixing together right now, it's my Jay interview. We didn't talk very long in New York. The other interviews he had ran over, and I just had about 15 minutes with him. But I talked with him the entire time about this kind of stuff, about hedging, about in money management, and about, the 2/3 rule and that kind of stuff. So anyway, he is down for it. I specifically talked to him about the TSLY crash trade. He had some suggestions on how to improve it, which is what I was hoping he would have for us. But he thinks it's a smart trade to do. He's fine with people doing it. I asked him to put together a package where they did it and kept it balanced for us, but he's not down with that. He says, you guys do it yourself. So anyway, be looking for more content like that coming out as well. And that Jay interview will hopefully be out tonight, or if not tonight, first thing in the morning. All right, guys, I appreciate your support, and I appreciate Brad specifically. He helped me when I went to New York, and I appreciate that. And also I have listeners, Jenny and Troy also helped, and I certainly appreciate all of you guys. You guys have a great day, and I will talk to you soon.